Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. I hope my voice is clear. First of all, I would like to apologize for the technical issue. Inshallah, we'll kick off the meeting right now. So I would like to introduce my name. My name is Munzar Al-Sharji. I'm the Head of Investor Relations in OQEP, and I will be the moderator in this call. Before I begin, I would like to sincerely thank all our participants, including our respected investors, valued analysts, and media representative, and all our guests who are attending this call. We truly appreciate your attendance and showing interest to learn more about our company. I'm honored to introduce our speakers today. Sitting on my left, Mr. Khalid Al-Qasabi. He is acting CFO for OQEP. And we have also Dr. Anwar Al-Kharousi, who is the Chief Commercial Officer. And of course, we have Mr. Mahmoud Al-Hashimi, our CEO. I also realize that this call is set just before the Eid public holidays. So, so we are blocking your enjoying your Eid holidays, but inshallah, we'll make it worth it for you. So we can have even this informative session. So let me read for you the disclaimer, as usual. Can move to the next slide. So we would like to give a brief note on the forward-looking statements. This presentation contains estimates, plans, and expectations. However, actual results may differ materially. And the relevant factors are noted in this slide. Please refer to our quarterly report and MSX filings for all details, which is also available in our websites. Can you move to the next slide? Today we'll be covering 4 agenda, inshallah. The first agenda, the Q1 2026 performance, which Mr. Mahmoud will give us the key message, on the performance of Q1, followed by Mr. Khalid, who will give us the financial insight, for the Q1 results. Agenda number 2 will be presented by Dr. Anwar Al-Kharousi, which he is going to cover and take us through the progress on the growth strategy. And the third agenda will be discussed by Mr. Mahmoud Al-Hashimi, where he will give us the investment case in OQEP. And then by the end, we will be giving a chance for the Q&A session. So over to you, Mr. Mahmoud.
Shukran, Munzar. Assalamu alaikum wa rahmatullahi wa barakatuh, and good afternoon, everyone, and welcome to OQEP first quarter financial result call. OQEP continue delivering strong performance, even in a low oil price environment that we have seen in Q1, due to our operation excellence and also capital discipline. While at the same time, we are focusing on our growth agenda we set out to the market. Always, as EMB company, safety is our top priority, where we both leading and lagging indicator that we have set at the beginning of the year have been met. We continue maintaining zero harm to our people, our environments, and our assets that reflect the discipline and the commitment of our people across the organization. Operationally, we delivered a stable production of 224,000 barrels of oil equivalent per day, with a balanced portfolio, 53% oil and 47% gas. On ICP, we deliver a 48% ICP index, exceeding our target for Q1 and reinforcing our contribution to the local economy and long-term sustainable growth. We further strengthen our governance and operation excellence by advancing 4 ISO certificates in Q1, which is quality, occupational health and safety, environment, and energy management, reinforcing our commitment to the international best practice. On the financial front, we have maintained a stable adjusted cash flow from operation of approximately around $140 million Omani Riyal, despite the drop in oil price by almost 16% comparing to the same period in 2025. We also maintained a strong balance sheet. Net debt to EBITDA remained low at 0.24 times, give us the flexibility to fund our growth while maintaining financial discipline. For capital efficiency perspective, our return on capital employed remains strong at 51% on annual basis, highlighting the efficient use of capital in OQEP. Our financial strength made us very confident in executing our growth strategy. We continue to invest in organic growth. Our capital spending is tied with our production enhancement, exploration, and future value creations. Domestically, we awarded Block 18, the offshore block with Petronas, which is a milestone for us, and hopefully in Q2 and Q3 this year, we'll be awarded new concession areas in Oman. Internationally, we continue to assess multiple opportunities in MENA region, Southeast Asia, and we have signed several MOUs with NOCs and IOCs. In summary, in the first quarter of 2026, we deliver a resilient performance and solid progress despite the low oil price. We protected cash flow, maintained a strong balance sheet, and we continue to advance our growth strategy. With that, I'll hand it over to our acting CFO, Khalid Qasabi, to take us in more detail in the financial numbers.
Thank you, Mr. Mahmoud. And Assalamu alaikum, everyone. Good afternoon, maybe good morning, and good evening for the rest. I think I want to just begin by saying that, as was also a note by the CEO, we had a strong sales volume, which drives a constant value generation despite the drop in the oil prices. I think I will direct your eyes to the middle graph. The management has actually delivered a good sales volume in both oil and gas. You see the management contribution isn't actually delivering the sales volume, both in oil and gas. In the oil, we've delivered actually 21% more than the first half of a similar period of last year, and the gas is 17%. The average realized sales price for the first half of last year was stronger at $75 per barrel compared to almost $63 per barrel for the first quarter of this year, a drop of 16%. But despite so, we've delivered actually the revenue. We've delivered a similar level of revenue of the first quarter of last year. Not that only, but the net profit remained constant and stronger delivery in the free cash flow. We have actually delivered more than 200% an increase on the free cash flow to a 70.7 million Omani Riyal and the free cash flow. Our balance sheet remains strong. Net debt to EBITDA is at the level of 0.24 times, making an ample headrooms for future growth and also dividend distribution for the shareholder. And it was also, as a note by the CEO, the ROCE, our return on capital employed, actually remains solid at 51%, following the support of the reclassification of the current loan into the current liability. Compared to the next slide. Compared to the last quarter or the last quarter of the year 2025, a similar view but stronger. Revenue is actually increased by 18%. Our net profit more of a 72% higher than the last quarter. Of course, this is supported by adjustment in the delivery of, or the adjustment of lifting of the oil of the last quarter and the current quarter. But nevertheless, the gas volume has been delivered by almost 1% higher than the last quarter of the last year. Oil price dropped slightly as an average for the first quarter of this year. We want to remind the listener and the investor that the hike that we've seen under oil prices will have some reflection, and hopefully in the second quarter of this year. Our ROCE increased also to 30%. Adjusted cash flow from operation improved by almost 21%. We had almost a similar cash flow generation, similar to the last year quarter, but we remain actually resilient in collecting our dues from our customer. Maybe a bonus slide that we also want to share to all the investor is the share performance compared to the oil prices. We've delivered a 67% total shareholder return, and that's actually annualized from the last period, end of 31st March 2025 to the 31st March of this year. And this is actually a very good sentiment to reaction of the share price as a comparison of the oil prices increase. I think with this, I will leave the floor to Dr. Anwar to deliver the growth strategy.
Hello, good afternoon. Indeed, as we may have communicated in the past, we have refreshed our growth strategy end of last year, where OQEP is emerging as a global energy champion with time. We've refreshed our purpose, where we want to energize indeed sustainable progress, delivering reliable, lower carbon energy for all at a resilient value, of course, to our shareholders and stakeholders. In terms of vision, we want to become gradually the global energy champion in the hydrocarbon space, partner of choice, maximizing stakeholder value through growth and technology and innovation. In terms of mission, we want to continue to build on our resilient position in Oman and expand gradually with time our presence internationally. Although, as I said, we want to maintain the business resilience domestically in Oman with our robust portfolio and continue to improve on it operationally, financially, technology-wise, and people excellence-wise. We go to the next slide. Here we highlight the growth pillars, where we would like to deliver disciplined growth backed up by our strong balance sheet, which drives this expansion for OQEP in Oman and outside Oman. The ambition that we've basically declared is to reach 300,000 barrels oil equivalent per day by 2030. And we want to maintain the reserves replenishment ratio at 100% level during the upcoming 5 years. We would like to do that via strong growth in Oman, as we demonstrated in the past few years, with a gradual selective expansion outside Oman in basically regions and areas of relevance and of choice to OQEP and to Oman. The way we will do that is to leverage our government back in. We want to use the government support and existing, of course, partners in Oman, where we want to leverage on our basically international journey. We will continue the financial discipline, funding basically these investments for growth from net debt, where we maintain net debt to EBITDA ratio of below 1.5 times. That continues to retain financial robustness for OQEP at all times. In terms of dividends, as will be explained by my colleagues shortly, we will continue to deliver shareholder value via dividends in 2027 and beyond, with the range of up to 35% of cash flow from operations, as Mr. Khalid will highlight shortly. Going to the next slide, this is showing our existing growth in terms of exploration. As the CEO, Mr. Mahmoud, highlighted, we've just signed a new concession agreement for Block 18 in Oman with a partner of choice, Petronas, where we own 30%. We think that this block is highly prospective. It uncovers a new basin in the north of Oman, and we are delighted to be part of that growth, inshallah. Of course, we continue to deliver the exploration and appraisal activities in the existing blocks, such as Block 48, Block 60, Block 54, and the other non-operated, blocks such as 47. In Block 60 and 48, we are basically tapping into ongoing testing of exploration and appraisal, production-related hydrocarbon flow, and that already adds to our basically cash flow and our monetization. In terms of projects, we did describe the Marsa LNG ongoing construction. Today we are at 48% complete, and we are on track to deliver that project by 2028 as we promised. That project will deliver additional value to OQEP, inshallah, from 2028 onwards. Other growth potential, you have seen our disclosures. We've acquired Block 27, which is going to add immediate production and cash flow to OQEP. And we are basically working out a few new blocks in the country, such as blocks 36, 66, and 80, and all of which you will see and you will hear the good news, inshallah, about an official sign-off in the coming few weeks. On top of that, we have been signing MOUs to deliver this growth journey, MOUs for both Oman and international with partners of choice to aid the growth potential for OQEP. With that, I'm going to hand over to Mr. Mahmoud, who will continue with the investment case.
Shukran, Doctor. So our first quarter 2026 financial results reflect the strength of OQEP Foundation and the disciplined execution for our growth strategy. As we continue progressing toward our ambitions of reaching 300,000 barrels of oil equivalent per day by 2030. Through operation excellency, high quality and low cost asset base, and the resilient balance sheet, we continue to enhance our production, delivering a strong cash flow and sustainable shareholder value, while advancing our growth initiatives. While the market conditions remain volatile, we are confident in long-term foundation of the energy sector and in OQEP ability to continue delivering attractive and sustainable return for our shareholders and stakeholders. I'd like also to take this time to thank our employees for their dedication and commitments, our partners for their continued collaborations, and our shareholders and stakeholders for their trust and confidence in OQEP. The foundation are strong, the strategy is clear, and the future of OQEP is full of opportunities. And inshallah, we're saying the future is brighter. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam wa rahmatullah. Thank you, dear speaker, dear Mahmoud, dear Dr. Anwar, and Mr. Khalid for the insightful session that we had. So we're going to open the session for Q&A. And as a courtesy, if you can limit your questions per audience as a maximum of 2 questions. And inshallah, if the time permits, maybe you can deliver your questions later on. And also, we would like to give the priority for the audience who are asking the questions, specifically for our investors and our analysts. But of course, we'll accommodate other participants' questions. If so before asking a question, maybe you can unmute your mic and introduce yourself, and you might put your question either in the chat box or you can speak verbally to us. So anyone has a question? So can we take a question from Koshik, مثلا?
Yeah, hi. Thanks for the presentation and congrats on a good set of numbers. This is Kaushik and I'm asking the question on behalf of United States. So just a couple of questions. So first one is that we have seen a substantial over 20% growth in sales volume in oil. Can you give us the reason for that, and can you also elaborate on this underlift adjustment? Was that the main contributing to the increase in oil production? And also, for the past few quarters, we saw that the EPSA allotment has been higher because of the lower price. So now, given that the oil prices are on an upswing, are we going to see a lower allotment resulting in lower volumes in the coming quarters? Can you just give some clarity on that? Thank you.
Okay. I'll probably take the first question on the adjustment of the lifting. Yes, there have been a delay on the lifting in the last quarter of the last year, and that was actually lifted in the first quarter. But nevertheless, we're not saying that is the main contributor for the enhanced financial of first quarter. You've seen also the gas have delivered a stronger volume, but we have also maintained our cost per barrel below the 9% or the $9 per barrel. So there are lots of contribution to the strength on the financial delivery. But there was, even if you compare it to the last quarter, if you normalize the quarter one of this year would have been stronger, you would see the normalization of 1.1 million barrel in the oil. Slight decrease, yes, in the first quarter of this year compared to last quarter. But as the performance of the first quarter have been stronger in terms of the top line, as I say, a compensation from the gas have come through this year quarter, but also a discipline in the cost optimization. Maybe in the second question. Yeah.
Second question, if I understand it, is regarding are we expecting a drop in liftings in second quarter? Is that correct?
Yeah.
Kaushik, can you ask your second question? Can you repeat your second question? Unmute your mic, please. Kaushik.
So if that's the question, okay, yes, there will be slight drop in lifting due to the increase in oil price. So we'll be recovering our cost with a lower lifting oil. But the gas will continue the same. So it was supported with the gas. And as I stated, the gas represents 47% in Q1. And that's an increase compared to last year.
Yeah, that was the question. So just one clarity, so by how much are we going to see the impact?
That will be provided at the closeout of H1. Okay, so exactly, we have not done yet the calculation, but there will be a drop, but that will not impact our revenue or profit.
So
Thank you.
positively is impacting our net profit. The lifting, it always depends on entitlement. With the higher sale, with the higher oil prices, entitlement will be lowered. But the impact, because of the oil price, is foreseen to be positive for the second quarter. How much would that be? We'll wait for the second quarter to actually be completed.
Thank you, Kaushik. So now let's take the second question from Mr. Mohammed Al Thunayan.
You mentioned that basically you're working on block 6 and 80 and potential additions of these blocks to OQEP's portfolio. Can you shed some light on these blocks, the oil and gas mix of these blocks, and what's the potential of successfully adding these blocks to OQEP?
So if I take, I mean, it's too early. So we are still in negotiation with the government. 80 is a producing asset, which is the Mosaddam, and currently it has some production, both oil and gas, but there are other prospects that will be working on it during the exploration phase. The other is still in the exploration phase, and it has both the oil and gas rights.
Is it fair to assume that Block 36 is massive in terms of size and area? Is my understanding correct? Compared to me, I mean, 66 and 80.
Area-wise, yes.
Anyways. Thank you very much.
Okay.
Okay, so may we take the third question? Yes, I can see it from Elder. Please go ahead, Elder.
Yes, hello, thank you. This is Elder Kaz here from HSBC. Two questions from me, please. Any chance you could share with us the production numbers for oil and gas separately? That's my first question. And secondly, when you engage in discussions, M&A discussions, obviously a lot has changed since last change in terms of oil price outlook, and how is this volatility impacting the sort of assumptions for longer term oil prices when you sort of look at valuations of assets? So, has this shifted this kind of a oil price curve, which, everyone is now putting in their models when valuing the assets? Has there been any change? Thank you.
So for the first one, we'll provide it to you. I mean, it's if you can do the calculation, it's 224,000 barrels of oil equivalent a day. That's the average. 47% of that is gas and 53% oil. So you can do the conversion. For the second questions, we don't see any much of change as we are leveraging more of G2G in terms of international M&A. And so we have not seen much of a change in the last couple of months.
Okay, thank you, Elder, for your question.
And probably the slide will be also available in our website with the sales volume. That will be also disclosed.
Yeah, okay, thank you. So let's read the question, which is available in the chat box. Given the rally in oil prices during first half 2026, should we expect the company to declare a performance-linked dividend for the period? Additionally, could the management clarify the oil price threshold or break-even level above which the group would be comfortable distributing performance-linked dividends?
Yeah. Okay. Probably start. Maybe Mr. CEO will also follow. But the company have a commitment is subject to eventually the board and AGM approval at the end. But the commitment is to, for at least 2026, is to deliver the promise. But declaring the performance-linked dividends will follow the second half of this year. A similar manner have been followed to last year. And the company has declared also performance-linked dividends. It won't be different than this year. This will follow in quarter two financial close. I think the second question was what's a break-even level above which the group would comfortably distribute. So I wouldn't actually go with the very, very direct answer to this, but if you've looked in the second half of last year, the company did not deliver performance-linked dividends, and it was very close to the base dividends when it comes to the what they call cash generation. So the second half of the last year would have been probably the reference for a break-even.
So again, if I've heard, I think Khalid covered most of it, but what I want to say that's the base dividends is 600 million for 2026, similar to last year. And any cash generated above that 90% will be distributed as a performance dividends for each half of the year. And based on the current oil price, most likely there will be a performance-based dividends for H1.
I think it's just to elaborate, the 90% is from the free cash flow after deducting the base dividends.
Yes.
Yeah.
Okay, so let's take a question from Mr. Bishan Bala. Can you unmute your mic, please?
Hi, good afternoon. Am I audible?
Good afternoon. Yes, audible.
Thank
Please
you
go
for the
ahead.
presentation and answers. Just to elaborate on where we stand and your question, your answer regarding the base dividend, could you give us a sense of what the average oil price is for Q2 and specifically H1 and where we stand? Last year, we witnessed oil price close to $70 in the year ended. If you give us some sort of sense as to where we stand for Q2 and for H1, if my understanding is correct, another probably week or 10 days, we will be closing out H1 in terms of our booking of revenue for oil prices.
I mean, Oman official oil price is published, and averaging H1 is around $80 or $81, if I can recall exactly the number. Q2, it will be around 90 something, but it's all published and we can't provide that.
So sorry, just to repeat, your Q1 oil price was 62.9.
Yes.
The average so far should be close to 80 for H1.
$81 for H1.
So far.
H1
H1.
until end of June.
Until end. Okay, and if my understanding is correct, by end of May we would have closed out H1 revenue. Is that correct?
No, end of June.
Okay, but I think isn't your oil sold on a 30-day sort of advance? If you could explain that mechanism.
It's oil price is 60 days, not 30 days. 60 days.
If you're saying 60 days advance, that means by end of April you had closed out H1. Is that correct? Understanding?
That's correct. So that's why I'm saying the average oil price for H1 is $81, taking into account that we know the oil price for June. But again,
Okay.
Yeah.
but again, that's in terms of oil price, but there are other things like the oil liftings, entitlements, and other things that need to go to the calculations.
Yeah.
Understood. Well noted.
Yeah.
And that would also conversely imply that the month of May, whatever oil price we witness is already feeding into Q3 oil price. Is that correct?
Correct. It will be July. So it's a 60 days.
Understood. All right. Thank you for that. Thank you.
Okay, thank you, Bishan. So allow me please to take a question from the chat box, and then I will go back to Elder and Mohammed Tanayan again. From Jimmy, or from James. Thank you for presentation. What is the status on the declaration of the commerciality at Jalil in Block 11? And a final investment decision on Block 61 expansion?
Maybe I can handle that. So Block 11 has been continued basically the exploration activity and the appraisal activity. There is a well which is still ongoing and studies which will also continue. The idea with the Block 11 is that next year, 2027, we will spend basically the time in the block to formulate an FDP and most likely reach a declaration of commerciality sometime in 2028. That is the current plan, but of course the operator and the government are on top of the timeline. In terms of Block 61 expansion, Block 61 is still waiting for a monetization scheme by the government. There's still discussions underway on how the gas will be monetized, and that is a government operator discussion which is ongoing. We expect that to reach a landing either by the end of this year or sometime in 2027.
Okay, thank you, Dr. Anwar. So I'm not sure if Mohammed Thanayan and Elder wants to ask a follow-up question, or this is just from the previous hand raised. Mohammed, can you clarify if you have a second question?
Yes, I
Yeah.
have two questions. The first one is it's linked to the gas production. So in the first quarter of 25 press release, you mentioned that gas production amounted to 30.5 billion scf. Then in the second quarter, you reduced the first quarter realized gas production to 28.9. During the first quarter of this year presentation, you highlighted that gas production for the first quarter of 25 is 28.5. So could we know the reason behind the deviations of the gas production throughout the quarters for the first quarter of 25?
Yeah, I can handle that.
So I think quarter one last year. Yeah.
Well, in block in the gas arena, by the way, for both block 61 and block 10, which are the main gas blocks, the idea was there was supposed to be maintenance which was deferred, and therefore there's additional gas which was realized from both blocks. That perhaps adds into understanding the change in the gas volume.
It's actually going low. So 30.5, 28.9, then 28.5. For the first quarter of 25, maybe.
25 or 26?
No, first quarter of 25.
Exactly, actually, Muhammad, because the maintenance has been deferred into 26, quarter 1 26, you see higher volumes in quarter 1 26 compared to quarter 1 25. Yeah.
That's the my second question is related to the realized oil price, the actual realized oil price based on the oil revenues. It seems that the realized oil price for this quarter is actually $66.4 dollars per barrel versus 62.9, which is the reported by I mean the oil benchmark. So is this due to higher sales of oil maybe during the beginning of the quarter?
No, no, sorry. The Q1 2026 average, the Q1 2026 average is 62.9. Is that what you're saying, Mohammed?
Yes.
Yes.
We calculate the realized. It's actually 66.4. I mean, the oil revenues divided by the 6.5 million barrels.
Yeah. It's not a simple volume divided by the, it actually have a nomination and a cost recovery, which have a different fiscal terms from one block to another.
Okay, that's
Yeah.
Thank you.
Okay, thank you, Mohammed. Elder, also, I'm not sure if you want to ask a follow-up question. Or
Yes, thank you so much. Apologies, I was disconnected. So I may have missed this discussed on this call, but can I ask you about the dividend policy again? So I've noticed that you mentioned on one of the slides that you expect a policy to be formulated for years after 2027, later this year in Q3, Q4 of 2026. Can I just ask, what was the significance of 2027? Why did you have a policy scheme sort of set for 2027, and why there will be another announcement? Why are these changes? Why, first of all, actually you've changed the policy from team now, which is now cash flow based, to operating cash flow based for 2027, and why you expect a different policy from 2020? Thank you.
I'll give maybe a high levels answer to this, and maybe Khalid can give more details. I mean, the current dividend is based on the prospectus, and it was set only for 2 years, 25 and 26. And because of the growth strategy that we are putting in place, then we cannot continue with the fixed performance dividends. So make it more variable to the free cash flow from operations. And so it's linked to that one, and we adjust as we go. So if we get a very good year of high oil price and projection, then there will be more dividend given to the shareholders. At a low oil price, then the dividend will be adjusted accordingly.
Yeah.
But
I think we wanted to also make it a very similar to the similar EMP business. Is mostly the dividends is linked to the cash flow from operation and CFFO. And also, while modeling this, we also washed out in a comparison to the similar companies that are listed in MSX. We modeled this, and I think the promise or the intention is not to go lower than what is already known, that we are always above the average. We don't want to, and we don't want to attend, or there is no intention to go lower than the average in MSX. Now, the prospectus was actually given a promise for 2 years, as Mr. CEO have said. And going forward, there will be a revision and a dividend policy, and it will be announced toward the end of this year. The guidance was given between the 25 to 35% from the CFFO, but nevertheless, this will be communicated toward the end of the year once we firmed out the growth strategy with the board.
Thank you so much.
Okay, thank you. So let me read out the question from Mr. Zuhaid Al-Khanji. If there were to be the performance-linked dividend given the first half 2026 result, would this be announced post the first half or full year 26?
Okay, so it's again similar to what we have also clarified in the prospectus. Dividend policy says the first half performance-linked dividends will be paid on the second half of the year, half in the third quarter, the second half of the performance-based dividend on the fourth quarter. The second half, if there will be any performance-linked dividends, it will be paid in the subsequent year. But the first half will be paid within the year.
Okay, thank you, Khalid, for the information. So Mr. Bishan, I'm not sure if you want to ask a follow-up question or you need to cancel your raised hand. Mr. Bishan, can you go ahead? Okay, so I think you just canceled his question. Okay, is there any further questions? Okay, Kaushik Misra, yes, go ahead.
Yeah, hi. Sorry, just a follow-up, a couple of questions. So can you just share some status of the Block 27 acquisition? Has it been completed? And if so, from when will the production start and when will it start reflecting in the financials? That is number one. The second one is that in the previous conference, the management has indicated that there will be, that they are looking at diversifying their operations through acquisitions from outside the market. So has the current conflict in the region, has that made any impact on any ongoing discussion or anything like that, or has it changed the company's view in terms of acquisition? If you can share.
okay. So regarding Block 27, it's still in the approval process within the government. But the deal is effective from January 1st, 2025. And regarding the acquisition internationally, there is no change. We are following our growth strategy implementation plan. And we, as I mentioned, the focus area is the MENA region as well as Southeast Asia.
Okay, thank you, Mahmoud. So probably let's take last question or last couple of questions. I will read it out in Arabic. السلام عليكم. نظرا لتحسن أسعار النفط بشكل ملحوظ من شهر مارس وحتى الآن، هل من المتوقع أن ينعكس ذلك إيجابيا على نتائج الربع الثاني، خصوصا فيما يتعلق بتوزيعات الأرباح وتوزيعات الأداء؟ ونأمل التوضيح إذا كان هناك توجه لمراجعة أو تعزيز التوزيعات في حال استمرار مستويات الأسعار الحالية. شاكرين لكم.
Okay. Maybe the answer will be in Arabic in this case يعني. صحيح هو في توقع انه بينعكس على توزيع الارباح، بس مع الاخذ بالاعتبار انه الارباح اصلا لازم تعتمد من الجمعية العمومية، بس لازم قبل الجمعية العمومية ان تنعرض للبورد، بس نامل ان تستمر في هذا السنة، وهذا هو المؤول له. What I was saying is the question was in the improved oil price for the second quarter of this year, and whether that will reflect a good dividend for the first half of this year. What answer was is we also think that this will be reflected in the dividend distribution. We hope this will be also approved by the board, endorsed by the board, approved by the AGM, but there's no intention to go otherwise for this first half.
Yeah. Okay, thank you. So if we don't have any final question, maybe we can end up this session. Okay, okay, so by the end of this session, I would like to sincerely thank all the presenters, starting from Mr. Mahmoud Al-Hashmi and Dr. Anwar and Mr. Khalid for providing us this informative session for Q1 result. And of course, I would like to extend this appreciation to our communication team, to IR team for putting all of this together, and wish you Eid Mubarak and happy holidays for everyone. Thank you very much.